Hi, everyone. I'm Kristen Myers, editor-in-chief of ETF.com, here with your market minute for Friday, May 16th. So we have all three major indices right now in the green and markets on the rise, despite a bit of a mixed bag that we have when it comes to some economic data. I'll start with what was released today, Friday. We have consumer sentiment actually falling as consumers believe that inflation is actually going to impact consumer prices and therefore their wallets going forward. However, just yesterday we had PPI, that's the producer price index, wholesale inflation actually unexpectedly fall for the month of April. Now, when we see wholesale inflation decrease, it usually means that inflation, or rather prices that consumers like you and I are going to pay, are going to be lower in the future. Now, again, this follows the CPI, the Consumer Price Index, another inflation gauge, which we saw earlier this week, which was also bang in line with expectations and actually just under, when we look at the annual rate, just under what economists had been anticipating. So at least when it comes to these inflation reports, we are not seeing inflation yet inside of the U.S. economy. We did also have Walmart report earnings, and they said that tariffs and economic uncertainty, they believe to be causing higher prices going forward. So again, that's the mixed bag. But markets right now are still taking all of this in stride, and we are still seeing investor optimism throughout the market. Let's take a look at volatility first before we look at some retail ETFs. So looking at VIXI, that's the ProShares VIX short-term futures ETF. Remember, the VIX is that fear gauge in the market. VIXI is in the red, down almost 1%, which means that volatility is decreasing right now. Although the VIXI has been on the rise lately. If we just take a look at the performance over the past year, or rather the past 3 months, over the past 3 months, the VIXI has actually risen over 23.5%. Now let's take a look at retail ETFs. I'll start with XRT. That's the Spider S&P retail ETF. It is in the green, over 0.5 percentage point today, right now in early trading. And then XLY, that's consumer discretionary. It is also in the green, however, only up about 0.25 percentage point. So again, a little bit of a mixed bag right now, at least when it comes to the economic data, but investors, at least on this Friday trading session, are taking it all in stride. They are being willing to take a little more risk, be a little more risk on in the market today, again, after we've seen such optimism over the U.S.-China trade and tariff pause. But of course, be sure to subscribe to ETF.com and be sure to continue to follow and watch us, because we'll keep you updated on everything to do with tariffs, the economy, retail, consumers, and of course, your investor portfolio.